All right, you guys, good morning. Let me know if y'all can hear me okay. It looks like everything's working. But yeah, so per usual, right, let's start talking about some of the news that's ahead of us and get this whole process on full display. Because as always, right, we need to find a way to achieve clarity in the marketplace. Okay. Oh, hello, brother. I appreciate you hopping on. Can you hear me okay? Can you see the screen okay? Just so we can make sure. Vineet. Dang, all the way from India, huh? Okay, for sure. All right, so yeah, as always, this is where we're going to start. We always start from the news, then we go to the interest rate markets, then we go to the currencies, then obviously from there we go to the DXY, and then from the DXY we go to the three indices. So that's like the systematic, like organized analysis framework, right? So yeah, to begin, right, we see that there's FOMC or some stuff related to the FOMC on Wednesday, and then we also have the federal fund rate, which, if you guys aren't familiar, the federal fund rate, this here is going to be the T notes. Okay, they're going to talk about the T notes, and pretty much that's going to be either a conversation about cutting interest rates or increasing or just leaving them the same. So, as I just mentioned, the interest rates heavily impact what happens in the marketplace, and it also can be or act as a leading indicator in the marketplace. So with that being said, it's one of the best indicators, you could call it, right, that helps you see the future, right, or start to get a good understanding of what could potentially occur in the future. And like I said, it's a leading indicator, so it's also useful using that analysis when we're in like consolidation on either the DXY or just for the indices if they're stuck in consolidation as well, or if there's like a crack in correlation somewhere between the indices and the currencies and just the list of assets we look at. It can help you see what is more likely to occur and what direction is more likely to be attacked. So yeah, it's going to be a very impactful event here when we do hit the federal fund rate. So keep your eyes on that. See whether they're going to raise interest rates or cut interest rates. And like I said, it's the T note. So when we go look at the T note, you're going to be able to see or hear yet again the relationship that has on the indices as well as the DXY. Okay, so keep in mind this is our landscape for the week. Consider power 3, right? Looking at this news event, right, we could have some type of manipulation going into Monday and Tuesday, right? And then because the heaviest news is on Wednesday, maybe Wednesday presents the low of the week or the high of the week, right? Depending on what we discuss here in terms of potential narrative, right? So you can look at this economic calendar as like a timing tool. You can consider them as macros, right? because a lot of times the large moves that occur on the higher time frame will be shown directly on the daily chart, the higher time frames, because just like the macros for the smaller time frames are effective in terms of trying to get in front of when price is actually going to move, the economic calendar acts like a macro, right, or a list of different times in the marketplace where the higher time frame objectives will be targeted, right, or the large range expansion that we're trying to get in front of or get in line with generally can come off the heels of something like the news, right? Because again, this stuff is used to manipulate price. And if we're looking for the best times to get into the market and see price move quickly, this is why ICT says pay attention to the economic calendar. It's like a scheduling tool, right? Or a timing tool. And like I said, it's useful when trying to identify when a higher time frame move is going to either begin or end up getting fulfilled, right? So keep that in mind when you're observing the news. Okay, so like I said, we have the landscape now, so let's move on to the next step. Okay, so we have the bond yields, right? So this market here is what impacts the DXY. Okay, so if this is going lower, many times the DXY is going to follow and go lower as well, right? When it's kind of cracked and doesn't really show a pretty clean correlation, something's going on, right? In this case, it's been a little bit skewed, but then again, you also have to remember that we're going into the fourth quarter. Tomorrow is the last day of the third quarter, and we're going to observe a tool that helps you identify when that change occurs, so then you can understand when you should go about changing the contract month that you're trading, whether it's for the first, second, third, or fourth quarter. So yeah, we're going to go on bar chart and show you how to do that as well. Barchart.com. Very simple tactic, but very important if you're trying to, trade futures. And there's futures for currencies and, almost every asset in the U.S. So yeah, we'll talk about that a little later. But yeah, so we could see what's happening here. Price is now pretty much taken out this low on this monthly chart. All right, so we're going to want to see what price is going to want to do. It's obviously bearish. Things are obviously falling. We have equal lows here, right? This has been very bearish, so I wouldn't be entirely surprised if we see some type of retracement, attacking buy side, at least for a short period of time, before it ends up trying to maybe go lower again. Okay, so again, this impacts the DXY, and if the DXY is impacted and does a specific thing, then obviously that's going to have some type of impact on the indices and the other U.S. assets that utilize this asset class as like a correlation or reverse correlation effect. All right, so we also have this large wick here. So if price was to pull back, we could see how this wick and the quadrants inside that wick could then potentially act as dynamic resistance. Aside from like new week opening gaps, that's what all these gray areas are. It's highlighting the Sunday that starts a new week opening gap from all these previous months. So it's going to be, pretty impactful when we approach those levels. A lot of times they end up acting as dynamic support and resistance. Sometimes they act as draws on liquidity. And just sometimes they also act as confirmation for a particular narrative if they're going to continue being respected. Okay, price bounces around those levels constantly. So yeah, it's very important topic to do a deep dive and study, right? But yeah, so we could see how it's bearish. It's been bearish. This is a monthly candle, so we could see how the month has been pretty bearish. We're halfway through the month, so it's not entirely done yet with what it's trying to do. Again, I wouldn't be surprised because we took out this low here. If they try to open up next week by rallying a little bit, then potentially using one of the quadrants maybe in this wick as a resistance level to then try to maybe drop lower and continue to drop lower. Let's go to the quarterly chart real quick, the 3-month chart. So this is what the whole quarter has looked like. The third quarter has been very bearish, basically disrespecting all three of the last quarters. So then we also took out a significant monthly low here as well. We can also see that there's a order block here on that quarterly chart. So that could be potentially impactful, supporting the idea that price may want to retrace a little bit to start this new or the new week. Okay, so keep that stuff in mind, right? Because we took out this higher time frame level here, it wouldn't be surprising if they want to pull price back a little bit before they end up trying to drop lower. Order flow right now is bearish, so we're going to continue walking forward with that perspective in mind until obviously something changes, if something changes. Okay, so this being bearish supports bearish DXY. Okay, so let's go see what these other time frames look like. So yeah, we have this low here that could be impactful. If we zoom in a little bit, let me make this bigger. Okay, so let's look at, so you could see how this low on this candle is perfectly in line with this one, so that creates equal lows. So again, it just gives even more evidence that price, although it took out this low, which may result in price wanting to retrace, our current dealing range, okay, I got a little too much on the chart for now, but if we go from this high to that low, that's our current dealing range, right? We have this new week opening gap from last week. The price could look to retrace back into. It's already kind of tried to do that. Okay. Now let me put this real fast. So yeah, we got relative equal lows here. Let me just keep this one up as well. Notice how we're still hovering above that low. So we want to see it not spend too much time up there above this low that it just took. But again, because it's a significant higher time frame PD array that got violated, it wouldn't be surprising if they want to pull back on us. And that's perfectly in alignment if we're looking at power 3, if we want to see a bearish move to the downside for the bond yields here, which again directly will impact the sentiment in the DXY. And then obviously that'll impact other things as well. But we'll look at more things to amplify the other assets. But yeah, I hope this so far makes sense. If we're thinking of bearish directional bias or sentiment or narrative for this asset, we'd like to see, when the week starts, price pull back a little bit into some form of a premium array that makes sense, right? There's this fair value gap up here, these consecutive up candles, and then we have this order block as well, which could be significant too, right? Price could very well pull back into that and then, maybe find heaviness at that level. But again, we have this new week opening gap. So preferably, if it is going to be overall bearish and continue to eventually target these equal lows here that I just mentioned, we'd like to see it stay below this, respect this like it has been, which is, again, a new week opening gap from the previous week. Okay, so those are some levels here to pay attention to. Just some overall context of what we're potentially looking for. These are also previous day's highs. So if you look at the high here, that's Friday's high. Let me go to the regular daily. So this is Friday's high. We have relative equal highs here. And again, like I mentioned, we have the new week opening gap from the previous week, right? So these equal highs, in my opinion, seem pretty likely to end up getting taken, because if you consider where the most recent liquidity pools are at from the last week, just for the whole month, to be honest, but specifically for this week, looking at last week's liquidity, we see these equal highs here. Okay, and then we have the new week opening gap. So I wouldn't be surprised if they run up there, stop those people out, to then get started and push price back into the bearish overall narrative. Okay, so starting the week, I'd like to see some type of bullishness to get us up into that level. That once price gets up into that level, we could then start to consider, potential timing for price to go lower. Okay? It's very important to understand that when you start the week, you could even avoid Sundays, which I always do. I haven't traded Sunday in probably 4 years at this point. But going into Sunday and Monday, if we're considering bearish power 3 or bullish power 3, we want to see price go against the narrative, seek some form of an opposing PD array. Like if we're seeking sell side, we want to see a premium array get violated to prove that smart money has pushed price up, or the algorithm has pushed price up to attack the opposing liquidity, so smart money can be positioned to go back in line with the overall narrative. Okay, it's very, very important to understand that. If you haven't studied Power 3 or you still got some questions about it, you could DM me on Instagram, leave some comments on the videos, or I have a playlist which I go very deep into Power 3 ideas, right? And gives you a pretty good understanding of Power 3 and how to navigate it, along with daily, weekly ranges and many other things, okay? So definitely check that out if you struggle with Power 3. Okay, so like I mentioned, we have Friday's high and Friday's low here. So if regardless of what price is trying to do, it's going to attack or have to attack one of those two levels in order for it to either retrace higher and attack these highs like I mentioned, or if it wants to attack this low here and then eventually come down and attack these lows, it's going to have to go through that Friday's low, right? So, when you start the week, especially if you're looking to potentially trade on Mondays, you want to consider the previous week's Friday, right? In that range from the high and the low, because no matter what it tries to do on this daily chart, those are your first liquidity pools that have to be violated. One of those two things. If we're bearish for the week, it's going to have to take out Friday's low first. So the first target, whether you're trying to look for price to go higher or lower, is easily identified by using this understanding of the fact that if it is going to go lower or if it's going to go higher on this daily time frame, it's going to have to breach one of those two levels. So no matter what, even if we're attacking this low or if we're looking to attack this fair value gap or this high, the first barrier it has to break through is going to be either the Friday's high or Friday's low. Okay? I'm kind of being repetitive with the explanation of that because this is a very, very simple way to identify liquidity pools that are very close to you. Okay? Instead of only aiming for, it's got to go up to this daily fair value gap, right? Or it has to attack these lows. That's all, great and dandy, right? But the thing is, these are closer. These are the more near-term liquidity pools that you can identify and frame setups around. So yeah, I hope that makes sense. There's other liquidity pools as well that have a similar use case that we can discuss in probably a later video, and I'll probably touch on it a little bit here. But this is very important. And then you can also use previous days' highs and lows. It's kind of what this is, right? But specifically the Friday's high and low going into Sunday and Monday are particularly important. Okay, and then you can use the logic that has been touched on before, that ICT talked about before. The last 3 days when you're going into a particular day, those are also significant liquidity pools, the last 3 days, right? So why am I telling you this, right? Why is this important? Because it helps you start to identify liquidity pools fairly simply. Depending on what direction it's going to go, what higher time frame PD array you're looking to attack, this helps you, quickly decipher a very obvious pool of liquidity. In this case, Friday's high and low. And then, like I mentioned, previous days' highs and lows. And then, like I also mentioned, previous 3 days' highs and lows, right? Those are also important if you're aiming for a particular level in that higher time frame. All right? So, yeah, I hope that makes sense. If you guys got questions, leave them in the chat. But otherwise, let's walk forward. Okay, so I am assuming that if we're bearish, I'd like to see price go up into some type of premium, equal highs, new week opening gap, previous Sunday's high or Monday's high, and then a fair value gap. right? But that's all just a frame price looking to go lower. Now, if it breaks through this daily fair value gap here, shows like no resistance at all, then we may be getting ready to see price attack these equal highs. Okay, so a contingency plan, if the sell side isn't targeted, which that's what I'm favoring, but if that does not show significant or valid, then we're going to end up, having another liquidity pool, which is up here. But before that, we would have this fair value gap. Then we have multiple new week opening gaps to get through as well, which can also be used as a target. All right. So yeah, I hope that makes sense. All right. So yeah, we'll now move on to the bonds. Now, like I mentioned earlier, the bonds are what's basically going to be talked about on Wednesday with the federal fund rate. Okay, so this is going to be significant because just like the yields here pretty much impact the DXY, right? The bond market, right? The bond market here, okay, let me pull up the symbols for those that don't have this on their watch list yet. Okay, so you want 3 of them, right? Why do we have 3 of them? Because they're different intervals. This one's a 30-year, the T-bond, it's a 30-year. Then we got the 10-year here, and then we have the 5-year here. All right, so this directly impacts the DX or the indices. So if you could couple these things together, you have a pretty deep understanding of what the indices are going to do, along with the DXY, and then that leads you to all the other forms of analysis that we end up doing. Okay, so this one, if the yields are going to potentially go lower, we're trying to see this do the opposite because they're reverse correlated. Okay, so we want to see if this is going to continue to favor buy side. But similarly to the yields, we could see price want to retrace back into this wick, this range of the wick here, and then potentially want to go higher if that's what's going to continue to happen. So you want to keep tabs on what that wick's levels are, and then just walking forward, study how price navigates or utilizes those levels. But yeah, so if we look up here, we have other highs here to look at, right? This is a monthly high, so it's a previous monthly high that could be utilized if it wants to go higher. Also another monthly high here, and then we have a little bit more of this fair value gap, but that's obviously going to take a while to get there. But nonetheless, the sentiment so far, like I mentioned, seems as though it wants to continue to be bullish unless something changes. What would change my mind? Well, we have a fair value gap here, we have a volume imbalance, and then we have an order block. Okay, so if that shows zero respect and slices through all that, similarly to if this fair value gap ends up getting violated as well, then that would overall turn my perspective bearish on the bonds. But again, for now, if nothing's going to change, we're going to continue to trust the bullish sentiment. Now, everything could change when the federal fund rate comes out, okay? Because if they cut rates, I believe that's going to send this lower, right? It may send this lower. Okay, so we're going to want to observe what that impact is going to be and what they're going to decide to do, and then, be able to walk forward. It's not ironic, too, or random that they're coming out with a federal fund rate announcement that could heavily impact things going into the fourth quarter, which opens up, I believe, tomorrow, okay, on the 16th of September. Okay, so yeah, that's very important to keep tabs on, okay? So yeah, that's my idea for what I believe is going to take place here. We also have equal highs here, as you could see, fairly obvious. So that could be targeted. We also have this order block and the levels associated, which the low of the order block, the body low of the order block, and then the midpoint. All of those, once price gets up into that, can be used as targets. but also reasonable areas where we believe price could have response from. So yeah, we want to keep that in mind. All right, as we can see, we have a wick here. We have this large wick, but then again, we have the levels on the monthly too to observe for the wick when price drops against that, to kind of see what price is going to want to do around those levels. All right, so again, unless something changes, right, if none of the discount arrays, if 3 or more of them get broken on this daily chart, then that's signaling something to you. That's signaling, hey, well, this isn't really as bullish as we thought. So that's how you can then adjust in terms of validating whether it's going to continue or whether you could continue to trust, assuming that price is going to go higher, or maybe things change, right? So again, we're going to want to wait till the federal fund rate comes out to decide whether this is going to continue to march higher, which is what I'm going to favor until something changes, or if price is going to then want to start seeking potential sell side, in which case we also have equal lows, we have a volume imbalance, we have wicks, fair value gaps here, and then also again we have a similar thing on the 5-year, right? We got equal lows, we have swing low here, the wick, fair value gaps, right? So if this is going to go higher, we'd prefer it to stay above this wick, okay, above the midpoint of the wick, right? But if it sweeps down below that, we'd like to see a quick response from that to continue trusting things. Otherwise, this will turn into an inversion, and then maybe even this wick midpoint will also potentially turn to an inversion as well. We have this up candle, right? You can measure that out as well. See if price drops below it and respects that, then that's pretty much a first indication that now bearish PD arrays are going to start being potentially respected, right? So these are just some observations to walk forward with and study in terms of trying to identify what the narrative is and what price is speaking to you, because this is a language, okay? This is like an animal, right? Like we got to decide what characteristics lead to what, and the things that I've mentioned here are very important. Okay, so again, if this goes higher, or if we're going to favor this going higher, it wouldn't be unreasonable for them to drop down, maybe try to take out Friday's low, maybe seek a little bit further, all the way down to the wick here, and then whatever the reaction is going to be from those levels can help us either support or look to transition to seeking potential sell side. All right, and again, if this goes higher, right, overall, if it stays bullish, then we'll continue to see the DXY go higher. The indices go higher, and then if the yields go lower, that's also supporting bearish DXY bullish indices. Okay, so this is what the DXY follows. This is what the indices follow, right? So when you're trying to justify a particular narrative, if you can identify what this market's doing and what this market's doing, you could then have an understanding of what the DXY is likely to do, and then what the indices are going to do, as well as the currencies, okay? So yeah, I hope that makes sense. I say it every single time on every video that I do, whether it's live trading during the week or if it's doing what we're doing here, which is a weekly analysis to try to get a feel for what's going to potentially take place and what we could be looking out for to validate or invalidate a particular narrative, right? It's very important. Some people think this aspect of things is boring, but I don't know what to tell. I don't know what to tell those people, right? Those of you that are on the call with me right now, I'm pretty sure you understand that, like how important this is and how helpful it could be in terms of building clarity, which is the number one goal here on this channel, to provide you with that skill set. And then also, be able to validate and invalidate what price is particularly going to do. So then you can have trust, clarity and trust, right? Doing this type of thing, that's what you're trying to achieve. And if you've spent any time with me on my live calls, or those of you that are in my private community, you know exactly how powerful this is. We, essentially we're more right than we are wrong. Okay, it's not perfect, right? Sometimes things will be skewed, but it's put you in the best position possible to be able to have a justifiable reason to want to buy or sell. Obviously, this isn't financial advice, but it gives you the ability to make that educated decision when you're trying to look to go into risk, or if you're trading a demo account, right? Trying to map out where price is going to go, right? So I hope that makes sense. Moving along, right? Now we see the currencies here. Okay, if we go to the weekly time frame, let me clean this up a little bit. We can see how all price has done. Prices dropped lower, took out multiple previous week's lows, and then price basically has responded off that fair value gap here. Okay, we have relative equal highs here. Okay, so this retracement, looking to see price go higher, makes sense, especially if the bonds are going to go higher, like I mentioned, because that will push around the indices. Right, just to remind you, this is the bonds, this is the yields. Okay, so this is justified, in my opinion, unless something changes. Right, that's something being these fair value gaps not holding, these consecutive down candles getting disrespected, right, breaking through the midpoint. That would be multiple PD arrays to the downside, invalidating price going higher. But unless that takes place, we're going to continue to identify, reasons to see price go higher. All right. Bias changes on a day-to-day basis a lot of times because we go from trending to retracement, and then obviously consolidation as well. But narrative on the higher time frame does not change on a daily basis, right? Narrative comes from these larger time frames. Okay, you can navigate bias within an overall narrative, right? In this case, the narrative's been bullish. Okay, but there has been some times where it does a retracement like it did here, but that's all leading up unless the structural integrity is violated, right? Meaning there's break in market structure somewhere that changes the whole narrative. Unless that takes place, we continue to trust and look for opportunities in line with, in this case, bullishness, because that's what the narrative is. The structural integrity of the bullish move is still active. Okay, so in that case, like I said, we have these equal highs here, fair value gap. So it just looks like it retraced to then want to go higher. So that's what we're going to continue to trust going into the week. And then, like I said, we justify that with what the narrative is on the bonds, and then also what the narrative is on the yields, so that we have the backdrop of what the indices could or should potentially do, and then also what the DXY is going to do. And then that just gives you trust, when you see things start marching in the direction you're favoring. In this case for us, it's going to be bullish until something changes. And again, if nothing changes, nothing changes. Okay, we stick to it. We don't flop around like a fish. Okay, go from one side to another every 5 seconds. Narrative doesn't change all the time, right? Generally, it's going to stay intact. And that's why the higher time frame is so important. Because if you could identify what the narrative is on the higher time frame, you have potential clarity with what the bias could be and the storyline could be for weeks on end, right? Sometimes, multiple days. And then when price goes against you, you don't start thinking, oh, well, okay, now we're going to basically turn around just because I feel like it's going to turn around, right? You have actual important information that can guide you to clarity and show you what you can trust versus what you can't trust. Or if you're trading counter trend ideas, which in which case would make you have to drop your risk by half. At least that's how I operate when price is going against the higher time frame narrative. All right, because you got to have rules for that type of stuff, right? You can't just constantly do the same thing in terms of risk when price is going against you or going against your higher time frame narrative, because now you're swimming against the trend. All right, but again, all the things we've discussed here help you identify and validate a particular narrative, which then again can help you identify bias and how you can navigate. Even when price retraces against you, you could still trust the higher time frame narrative, right? And again, in this case, I'm believing that because of what we saw in the bonds and yields, which promotes bearish DXY, potentially continued bullish indices, that'll translate to the currencies going higher, or that's what we should see. And if that doesn't take place, then obviously there's a cracking correlation between our risk on, risk off analysis, right? I'm going to pull something up that is in my private community so I could share it with you guys in terms of risk on, risk off. All right. So let's go to see if I could find it for you. All right. Where is it at? See if I could find it. Okay, here it is. Okay. All right, so I hope you could see this fairly well. All right. This is your risk on, risk off analysis. Okay. This is what the relationships should show. All the stuff that we just talked about in terms of the correlation, how the interest rate analysis impacts particular markets, and then basically if the market is overall symmetrical, overall, like everything's moving the way they should, and it's a healthy environment for a trend, these are the things that you want to see price doing when it comes to the different assets. Why is this important? Why am I showing you guys this? Because this is part of your weekly analysis. If you don't know what these other assets are doing that impact the asset class you're trading, you're going to be surprised. Things may go against you, and then you'll start to feel confused. You'll start to feel like you don't know what the hell's going on, and it's just, this is the way that you can get even further clarity, like we've been talking about this morning. Okay, and then that clarity will lead you to trusting whatever idea you're trying to go ahead and engage with. All right, so take a screenshot of this. Okay, it's very important. These types of things are scattered all across the private community, but I think I've talked about this before as well on the YouTube channel, right? So yeah, definitely take that into consideration. Okay, but yeah, again, we're looking for this to potentially go higher. We're going to observe how the response is from this fair value gap. And then just like how I was talking about on the yields, talking about Friday's high and low, if price is going to go in a particular direction, it's going to seek one of those levels first. Same thing here. Okay, this is on the weekly time frame. So just like how we talked about Friday's high and low, right? Going into Sunday and Monday being our first initial target, when you get to these higher time frames, you can do a very similar tactic, right? This is the previous week's high, previous week's low. So if the week is going to go bullish, in this case, and attack maybe this high or this high, it's going to have to take out this weekly high first, right? So I hope that's clear in terms of the importance. Because if you're on that lower time frame, or if you're on the daily chart or going into the lower time frame charts, trying to seek the most near-term objective, it's going to be generally the previous day's high and low. Going into the start of the week, it's going to be Friday's high or low. If the week's going to try to attack a particular direction. But if you're looking for like the weekly perspective, and now you're trying to find the even larger time frame objective that could work within, or that could help you work within the weekly range, right? You can identify the weekly high, previous week's low. You could do the same thing if you go to the monthly chart, right? If price is going to attack this high here, right, it's going to have to break through this high, right? So you can see that it's like a ladder, right? On the different time frames, there's different levels that have to get attacked first, but all those work within the higher time frame levels of liquidity. All right, so, oh man, I really hope that made sense to you guys, because it's a huge leap forward in terms of price navigation. It's some of the things that I try to discuss regularly, and it teaches the fractal nature in price and how to really navigate from one time frame to another and then from the higher time frame, and then how to go to those lower time frames and navigate liquidity, and shows each level in terms of time frame. It kind of highlights the different levels of liquidity that you can identify. So it's not random liquidity pools that you're aiming at. Oh, it's just this random freaking high on the 15-minute chart. No, all of that price action works inside of the higher time frames, and these are higher time frame levels that must be violated if price is going to seek this fair value gap or seek this high, right? It's going to have to bust through something first, right? And like we talked about, Friday's high and low is like the most near-term higher time frame view. That's all working within something like the monthly chart, something like the weekly high and low, right? So like you could do something like this, right? You can mark off this high and this low, and then obviously this high is the previous month's high. So you can mark that as well. If it's going to go higher, it's going to have to attack those levels. So if it gets close to that level, you'll know it's important, right? Later on. Then, like I mentioned, you take that, then you also use the weekly high and low. That will be attacked before the monthly high and low, high or low will be attacked, right? But before that weekly is going to be attacked, if we go to the daily chart, we got previous day's highs and lows that have to be attacked before the weekly high or low, the previous week's high or low is going to be attacked. And then you take that one step further, right? And then you can go to like the 1 hour, right? And then you could start to identify with more details the Friday's high and low, right? Or Friday's over here, right? Friday's high, Friday's low. Okay, so if that weekly or monthly target in terms of weekly high or a weekly low or monthly high or monthly low, in terms of those being attacked, before that gets attacked, it's going to have to break the previous day high or low, right? So yeah, I really hope that made sense, because that is such an important liquidity identification tactic. It's unbelievable how important that is, right? It goes hand in hand with the explanation of price is fractal, right? It goes hand in hand with that and kind of breaks down, why that's important, right? Like, what does it even mean? Fractal high or low? Why is that even important, right? Price is fractal, right? Why is that important? Well, pretty much what we just discussed visually shows you kind of why that's important when we're referring to identification of a particular liquidity pool that's going to be attacked inside of a particular narrative. Okay. So yeah, again, I hope that makes sense. If you guys have questions, please let me know, because that's something that I try to get everybody to at least get familiar with, because it's very, very helpful, right? So yeah, like I mentioned, if we are going to continue going higher, which is what I'd like to see, we should continue to stay above this fair value gap. We also have this wick here. Okay, so going into the new week, a new weekly candle is going to form later today. So we should see, the wick here, the quadrants of that wick potentially act as dynamic support. And then we should also see the quadrants inside this fair value gap potentially act as support as well. And then obviously the new week opening gaps, you can go identify those as well. We have one here. We have one here. We have one here from the previous week. Okay, so we want to observe how that's going to respond as well, aside from the weekly wick here and the quadrants related, and then the fair value gap quadrants as well. Okay, so yeah, that's kind of the context for the GBP USD and Euro USD. So yeah, again, if you guys got questions, please let me know, right? Because I don't want you guys to be lost. I'm here to try to get you clarity, okay? But yeah, so if all that stuff makes sense, just to review, bearish DXY because of this market and what it's showing, potentially bullish indices given what this is showing. That should translate also towards the currencies, GBP USD, Euro USD, with price potentially seeking buy-side liquidity. Friday's high, Friday's low being the first objectives that should be violated, right? No matter what it's trying to do. Because if the price is going to go higher or if it's going to go lower, this new candle that's going to form today is going to have, I mean, it's just should be obvious that that's going to have to be attacked because this is the previous candle and that's the previous liquidity, right? So taking that information, assuming that, price, if it wants to go higher, it's going to have to do that, favoring the fact that it's going to go higher because of the things we just mentioned. We move to the DXY now. All right, and we will see what that's looking like. Okay, and then with the backdrop of everything that we have just talked about, you now have a lot of information to utilize to then justify a particular idea here on the DXY. And it's going to be, the same when we go into the indices as well. Okay, but yeah, if we think this is going to continue to push price lower, I mean, you could already see the impact that market has on the DXY. Like you could already see how impactful it is, right? And just the validity of what I've just mentioned in terms of the bonds and yields being leading indicators for the indices and the DXY, right? In this case, bearish DXY. Again, right? It's justified by this. Okay, so with that being the case, right, we could see how prices swept out the low here, like I mentioned on the yields. The yields, right? Just so you guys don't get lost. A lot of people get confused and lost with this. But yeah, you could see how, we've came up, hit this fair value gap. Now we have relative equal lows here. It did sweep out this low a little bit, but it looks very bearish, right? It looks more convincing, especially with the backdrop of information we've talked about supporting the bearish idea on the yields. It's supporting the fact that this still looks like it wants to continue to go lower, which again supports the idea that because the bond market, right, the bond market, it supports the idea that this is potentially going to go higher as well. Okay, so what would the narrative be going into the DXY given all that we've discussed here, right? I'm favoring sell side on the DXY, so some type of sell side target. In the first target we would aim for would be the previous week's low from this time frame. But even before the previous week's low is going to be attacked, we have Friday's high and low, right? If the previous week's low is going to be attacked, which is here, right? That previous week's low is in conjunction or is the same as the Friday's high or Friday's low, I mean. Okay? So if it's going to go lower, that's the first target that I'm looking for, is Friday's low, which again is the weekly low. And then after that, we have the rest of the lows here, relative equal lows, another low from the previous week, from 2 weeks ago, right? And then we also have, for buy side, if something happens where it wants to turn around and go higher, we also have previous week's high here. Then we also have, like 2 weeks ago, the high here as well. Relative equal highs, we have a fair value gap, right? So if the downside is disrespected and doesn't show that it wants to do that, then we're going to be able to adjust fairly easily. We have a inversion fair value gap here if it gets above that to justify something that could support price getting up into there if that does happen. But again, I'm favoring price wanting to seek lower prices because of what the yields are showing us. You could see how price is consolidated here with the DXY. Okay, the yields favoring sell side gives me the trust and clarity that price is more likely to continue to seek sell side out of this consolidation versus the buy side because of how powerful the impact is with the yields, which translates to the DXY. Okay, that's a leading indicator for the DXY. And then again, just to make sure you don't get confused, the bond market here, the T-bond futures, is what is a leading indicator for the currencies as well as the indices. All right. So yeah, I hope that makes sense. But I hope that that's pretty self-explanatory in terms of what I'm looking to see take place based on all the stuff we talked about for the DXY. Right. So I'm wanting to see sell side taken. First target will be Friday's low, which is also the previous week's low. And then after it breaks through that, right? We still have quadrants here on this wick. Then we also have this low. And then you look to the left, we also have relative equal lows as well. Right? If we zoom out, right, we can try to see if there's, yeah, so you could see this here, right? If price does seek that, we have an even larger time frame. This is a 3-day chart. We see that there's a fair value gap below those equal lows that we just talked about, right? So you can see how things start to piece together. Like if price is going to seek sell side off the backdrop of the yields looking bearish, right? If the DXY is going to seek sell side, now we have near-term targets, medium range targets, right? That being this low, and then longer range targets potentially for the week being this fair value gap here. Okay, if we are going to see price go lower. All right. And then again, we worked out what could potentially allow us to shift with confidence, right? If this does end up getting above this fair value gap here and doesn't use it as resistance, or if it gets above the midpoint of this wick, we could then have a logical target towards the buy side, right? But again, we're going into the week favoring something. What is that we're favoring? We're favoring sell side based on all the things we talked about for the DXY. And then that should then translate to us continuing to see potential bullishness for the indices. Okay? And then again, just to reiterate what we talked about earlier about Power 3, even if it is going to go higher in the indices, or if it is going to continue lower for the DXY, we can reasonably anticipate price going against that, because that's Power 3, right? Manipulation against what we believe is going to take place. Just to position price in a better position for smart money to take advantage of it and put their positions at better prices. In this case, a premium, right? They go higher to go lower. They go from discount to premium. Or premium, in this case, if it does go higher, to discount, right? Which would be aiming for sell side. All right? So, yeah, I hope that makes sense in terms of what we are favoring going into the new week, and then what would potentially change that, and then how we can flip our perspective if we have to change because something changes, maybe off the heels of the federal fund rate, in a logical manner, right? How we can pivot in a logical manner, okay? If you guys have been getting value so far, I forgot to ask earlier because I was kind of focused, but if you guys could like the video, if you haven't subscribed, definitely consider subscribing. And if you got some friends that like this type of conversation, or you feel like they can get some value, definitely send them to the channel. Maybe they can find some value here as well, because I do this for you guys, right? I want to see people succeed. And although I have a private community, you guys mean the world to me as well, right? Just the fact that you guys are here and have been with me for almost an hour now, I greatly appreciate your time, because you could be anywhere else, but you're here listening to what I have to say. So I greatly appreciate your time. And I hope you get value, right? So I hope that makes sense, you guys. So that's our opinion, to try to see price go lower. And there's some of the reasons why, and some of the further context showcasing why we should be able to trust that price is going to continue going lower if everything stays intact. Okay, now we can move on to the indices. This has taken an hour because of how deeply I have to get into the explanations. Once you understand this process that we're talking about, this literally takes me anywhere from 15 to 20 minutes, sometimes less, right? Just because, I understand all the things that we're going over here, and it'll be the same for you. It's not going to take as long as it's taking right now, because I have to break down each element so you can go and apply it and make sense of what we're talking about. Okay, but the time that you spend learning this stuff and getting all the needed answers and context, the faster and more effective you'll end up being able to be with your analysis. Okay, keep in mind the things that we've talked about this week, and then maybe even go review some of the other videos that I've done showcasing this exact process, and then see what's transpired. It's mind-blowing to see how helpful this is, and it took me pretty much almost 3 years to master what I'm trying to teach you guys in a fairly short amount of time, and it's all the important elements to narrative and bias and how you can gain clarity. Okay. But yeah, so all that stuff that we've talked about in terms of justifying why DXY should be bearish, and then also, why we think the indices should be bullish, we could then move that to the indices. And now we have a pretty deep understanding of why. Okay. Why should we favor price going higher for the indices, right? And what would turn that off, right? What would change the idea? You know what I mean? What would make price turn and now start to favor sell side? Well, like I mentioned on the DXY and the yields, right? There's 3 PD arrays to the downside that we have to continue to observe. Okay. If we go to the 4-hour, you could see the order block here that's mentioned. But yeah, if price is going to look to turn around and not favor the buy side, it would have to, first of all, be justified in the bond market. But then also we'd have to observe 3 PD arrays get violated here. So we have a fair value gap here. We have a swing low here. Okay. We have a fair value gap here. If it breaks below that and uses it as resistance, that turns to an inversion. But then aside from that, we also have this swing low here. Okay. So price breaking lower away from this structure, right? And just slicing through that with no effort, that would turn our attention to levels below the low. Okay. And then how price responds below that low would dictate how we feel about changing our overall narrative. Okay. The narrative being bullish here has sometimes bearish moves. That is an example of how bias can change more than narrative could change, or changes more than narrative, right? Narrative sticks and stays intact for a while, sometimes weeks, sometimes months, sometimes for a whole quarter. Okay. But then obviously sometimes there's retracements on the lower time frames, right? But understanding the narrative and trusting it deeply based on kind of, some of the things that we talked about here today helps you navigate counter trend ideas as well. Which I made a whole video about that, I believe last week or 2 weeks ago, which you should go check out if that's something that interests you. But yeah, we're going to continue to trust price going higher. We have a pretty beautiful level up here that's very obvious. We have shown little to no weakness, basically going against the fact that this is the draw on liquidity. This here is also a market maker buy model. Okay. It's something that we've discussed in the private community. So yeah, I'm going to continue to favor that because we're so close to these highs here. If we are going to be bullish, again, we don't want to see this low get violated. We'd like to see a pretty quick move for the week getting us up into this level here. And it may, like I mentioned, utilize one of these news events to then punch price towards that direction to fulfill that potential objective. Okay, we can see how this 8-hour fair value gap has been hit. So I mean, this could trigger a retracement down into maybe the rest of this fair value gap. Again, this is a daily fair value gap here, but we're just looking at the 8-hour for a little further context for the market maker model identification. Okay, so that's what I would like to see, right? Again, if it starts the week and we're bullish, it's reasonable for us to anticipate price dropping to go higher. So that is what I want to see. And then obviously we want to spend as little time as possible down here inside the fair value gap. If price does reach down there to that fair value gap, keep tabs on what news event takes place when we get down into that level. Mind you, the Friday's high, right? Friday's high, Friday's low, it will potentially be utilized to offset or reposition smart money, especially because of fair value gaps in conjunction with that. Price could drop down, take Friday's low into the daily fair value gap, into that 8-hour order block, then use that liquidity to then position smart money to get up above these buy-side liquidity pools up here. Which, again, that's what I want to see based on all the stuff we've talked about this morning. All right. So yeah, that pretty much does it for what I'm trying to talk about this morning. So yeah, I hope that makes sense. But before we go, all right, let's look at the three indices side by side and kind of get a feel for that relationship as well, to further amplify the overall narrative across the board. Okay, so we could see the bullishness here. Again, that's justified with bullish bond market, right? So the bond market's going bullish. You could see how beautifully that has impacted the run off of this low, which also had SMT here, which you could visually see that led to price going higher. Okay, so not only is this beautifully identifying basically showcasing the importance of the bonds and yields and how that impacts both the DXY and the indices. But it's just beautifully showing you how everything is connected. Okay, and it's showing you why this is such an important aspect of things, to build clarity in your trading, build clarity and trust in your overall narrative identification, and how strongly you can end up trusting this process and why it's just so powerful. Okay, and again, if you spend time with me, you will see this continuously taking place. It's pretty fascinating, right? So, because everybody wants trust, right? They all want clarity in price and to be able to trust that this could be a continuous income. Well, this is how you can start walking forward towards, making that a potential reality, right? So yeah, I feel like that has pretty well equipped us with what our mindset is going into the new week next week. Again, I appreciate those of you that have hopped on, and I appreciate the ones that have stayed all throughout this. I know sometimes it seems like it could be a long process, a long time to sit and listen to someone talk like this, but I hope those of you that have made it to the end have seen why all this stuff is so important and just how helpful it'll be when you're walking forward, trying to become the trader that you're trying to become. Okay, so again, just to review before we go, I'd like to see the yields go lower. It would be reasonable for us to see price go higher first, and then look to see price go lower off of the heels of that, and then we can see the bonds look to go higher, and then look to see the currencies try to favor the buy side as well. Okay, so see bonds go higher, yields go lower. That should send the currencies higher. That should send the DXY lower, and then that should send the indices higher, right? Starting the week, it's reasonable to see them go against that to position smart money in the best possible position, and then see them look to maybe fulfill the buy side here for the indices, as well as the currencies, and then the sell side for the DXY. All right. So again, I appreciate your guys' time. If you guys have any questions, definitely let me know. If you made it this far and haven't liked the video, definitely like. If you haven't subscribed, definitely subscribe if you get value. Maybe tell a friend if you think some people that'll enjoy spending time with us here in the WMG trading family. With that being said, you guys, thank you again. You're much appreciated. God bless, and I will see y'all sometime this week, probably on Tuesday. All right? So take care.